And then we have the opening bell on Wall Street, Julie, on this CPI Thursday. Again, CPI coming in a little lighter than expected. There we see our former colleague, I think on the right, that is Joe Lambert. It's good to see Vincent down there on the New York Stock Exchange on the CPI Thursday. And again, markets, lots to digest here, Julie. Do you focus in on the areas of clear inflation in rent or in eggs like we've been talking about all morning long, or do you focus on the fact that the headline slowed month over month?
Yeah, it looks like people are focusing on the slowing, the good part of this report, at least if you're judging by the opening numbers here. We've got the Dow higher by nearly 100 points, so not a huge gain by any means, and we'll see if it lasts. Right now, just up 0.25%. The S&P up about the same amount here, 0.25%. The NASDAQ up about 1/3%. As you know, I have been watching these bond yields very closely. To about 3.5% is where we are on the 10-year, even though on the face of it, today's numbers don't change anything in terms of the Fed's trajectory, but we are seeing bond yields come down. This continued disconnect between what the Fed is telling us and what the market is showing us in terms of what they think the Fed is going to do. Let's also take a look at some of the opening movers here when we look at the various heat maps and such that we tend to watch. And we are having, there we go, a little bit of slowness there in our heat map. But we are seeing Amazon helping lead some of the gains. It's up by 2% out of the gate here this morning. So that stands out to me. Tesla shares are down by 0.8%. But really a mixed picture here, which leads me to believe maybe we will not see some of these early gains hold up. We will watch sectors as well. Just quickly here, taking a look at the sectors, a lot of green here with the exception of the XLV, which is down about 0.5%. Energy and consumer discretionary leading the pack. And then one other group that we continue to watch here that has been more active as of late, it is the meme stock. So we are seeing memes largely in the green here this morning. Let's equal weight them so we can get a little bit of a more clear picture. And right here, Brian Sozzi, it's your favorite stock in the upper left, Bed Bath & Beyond, trading higher by 15% on the day. We talked a lot about this stock yesterday, along with Party City, its partner in perhaps going bank, not partner, but both of them are potentially going to be filing for bankruptcy protection.
Carefully, my friend.
Yes. So Bed Bath & Beyond on our mover list again.
Yes, it's just living there. You know, I did a piece, it's on our homepage right now. I encourage everyone to check it out and run through some of the short selling data from our friends at S3 Partners provided to us. But you've seen a massive short squeeze in Bed Bath & Beyond this week because they did not utter that word bankruptcy on their earnings release on Tuesday. That really seems to have set everything in motion. Right now, you're looking at about 140% gain on Bed Bath shares compared to the opening price on Monday. Really, despite the fundamentals of this business continuing to be very, very bleak. You know, as S3 warns, they put out a new note that I got my hands on last night. The stock price could very easily go to zero just based on where the company's outlook looks like.
Yeah, definitely. I mean, I don't know what more to say about it. It's a waiting game at this point.